What's going on, ladies and gentlemen? Welcome back to another video here on my channel. Today is an absolutely phenomenal day because I ended my day out $6,345 profit after commission. So today you guys have already seen one upload of our live trading recap from our private trading room with our private members. In that video, you see me make about $3,400. Well, later in the day, after we stopped that recording, I seen another opportunity to hop in long on the stock, I believe INO, and I ended up being able to make another $3,000 profit on that trade to end my day up $6,345.08. In this video today, I'm going to walk you through each of those trades, and I'm going to actually show my trades that I took and give you guys a good understanding of risk to reward and profit loss ratios. So I'm going to walk you through each of the good trades that I took for the day. There really wasn't any bad trades. There was one trade I took that ended up being a small loser, but it's so minuscule that it's almost pointless to talk about. So I'm going to walk you through all the major trades I took for the day, my exact entries, and where I would place a stop and our profit targets and so on. So this video is going to be extremely helpful for a lot of you beginners and even some of you experienced traders. All right, so we're going to get into sharing the screen here. So give me just a second. All right, so you guys should be able to see the screen here now. So what we're going to first do is we're going to go to the stock PVTL. This was the first stock that I really started trading on the day that I ended up, making a good chunk of change here. So we're going to minimize a few of these things on here and give me just another second. All right, so here you can go. You can see I made a total of $2,821.06 on PVTL today. So let's walk you through these trades. So the first thing we're going to do is we're actually going to put my trades on the chart. And if any of you guys ever wanted to do this and understand how you can actually put your trades in the chart, you go up to this little gear icon on the chart in the blue banner. You click that, and then you go to this right here where it says show trades. You click that, hit apply, and then it will show you all the trades you took on the stock for the day. All right, so my first trade on PVTL today was right here, and I'm going to mark each of these levels off with a red dotted line. Okay, so my first entry on PVTL was at $22.17. So my first entry was right here, $22.17. All right, so that red dotted line, and I'll actually increase the size of these for the duration of the video. So we're going to increase this to 3. We're going to do save as default. Okay. So my first entry was this big red dotted line. I took a 3,000 share position there at $22.17. My first exit was at $22.52, which ended up being right there. I ended up taking off 2,000 shares there. We'll go over all these again here in just a second. $22.74. I took off 500 shares, so $22.74. $22.74. Right there. And I took off a little bit more at $22.91. Okay, so each of these red lines are my entry and exit for my first trade on PVTL today. So today I took 3,000 shares long. This first yellow arrow marks my entry for 3,000 shares long on this red candle. Okay. My first exit was 2,000 shares on this green candle right there. Okay. Then my second exit was on this red dotted line with 500 shares at $22.74. And then my second or last exit on that full trade was a last 500 shares at $22.91 on this candle. Okay. So to walk you through that again, I hopped in long 3,000 shares right here. I ended up selling majority of my shares right there. Then I only had 1,000 shares left, so I sold 500 here and then 500 there. This is a perfect example of starting with a big position, and as soon as you get a nice pop in your favor, decreasing majority of your position, locking in a lot of money, and then letting a few shares ride, and you continuously size out of your position. So it's more of a conservative approach to trading where you're getting in and you're taking money out of the trade little by little rather than going in full size and holding full size all the way up where you could run the risk of it pulling back on you drastically. So it's a strategy which we call in sizing out, where you get in and you pull some money out, pull some money out, pull some more money out, pull some more money out. All right. Now I'm going to walk you through my next trade. After I walk you through my next trade, we'll then look at the profit, loss, and risk management side of these trades. All right, so let's get these old drawings off, and we're going to go through this again. So my next trade was another $3,000 position. Right here, you can see plus 3,000 at $22.81. So my next trade on this was at $22.81. So I bought in 3,000 shares right here, okay? And my exit, we can basically say my full exit. We're going to disregard this trade here because it's basically pointless on the day. So my exit, so when I got in 3,000 shares, my full exit was basically right here at $23.40. So $23.40 right there. So there was my next trade. To map this off for you again, I took a long position of 3,000 shares at $22.81, which is this red dotted line, and the entry was on that green candle. All right, I rode those 3,000 shares up to $23.40, which was right there, and I sold 2,500, and then I thought maybe we'd pull back a little more. I ended up exiting basically my full position. So it's safe to say that on this last trade, I entered 3,000 shares right here and exited basically all the 3,000 shares right at $23.40 on that candle, okay? So now that we've gone through that, you guys can see where my entries were and where my exits were. Now I want to walk you through the profit loss ratio and the understanding of risk management behind each and every one of these trades. All right, so for my first trade in the morning, where I hopped along with 3,000 shares, okay? So my entry, okay, we'll mark the entry off by this yellow arrow. My entry was basically right there, okay? And my full exit was at 2290, 2270. So we can say the full exit was basically just below 20, right? Yeah, just below 23. So like right here. So this yellow arrow, the first one's my entry, and the second one here is where I fully exit. Now we're going to use boxes to describe this profit loss ratio and risk management. So this red box will be my risk factor. So I entered at 2217. So my risk was from 2217 and down to the end of that green candle. So this red box defines how much risk I was willing to take for that trade to go against me. And this green box is going to describe or show my profit potential, or the profit that I did receive in terms of going up was all the way to there, okay? So if we move these boxes to the side in another manner, so we'll move them over here so you can see them a little bit better. So this red box was my risk for the day on this trade, and the green box would mark my profit. So you can see clearly that the amount of risk I was willing to take for this trade was less than the amount of profit that I could possibly make for the trade. Right here, we're looking at about a 1 to 2, maybe just a little bit above a 1 to 2 profit loss ratio. And the rule of thumb in trading is you're supposed to have a 1 to 2 profit loss ratio to even consider taking a trade. There's no point in taking a 1-to-1 trade if it's just, this is the rule of thumb, because there's no point of risking $100 to make $100, right? You can justify risking $100 to make 200, okay? So in this trade there was a 1 to 2 profit loss ratio. My initial sell target was $23. So if we look at this in terms of value, okay, I got in at 22.17. My stop would have been at 21.88. So from 21.17 to 21.88, that's 3, that's 13. So that was 30 cents risk. I had 30 cents of risk, and the profit potential was from 22.17 to 23. So my trade I was aiming for by the time I got in was from 22.17 to 23. So you do the math. That's about an 80 cent to 83 cents profit while only risking 30 cents. So that's a little bit more than a 1 to 2 profit loss ratio on that particular trade. Moving forward to the next trade, okay? So my next trade, I was long at 22.81, which was like right there. That actually, that's a green arrow. We don't want green for right now. So my next trade was at 22.81, which was right here. My risk on this, oh, and then we'll do my exit. My exit was at basically 23.40, so right here. Okay, so my risk for this trade will be marked off by this red box. So my risk factor from this trade was from 22.81 down to the low of this previous red candle. So we'll draw this in right now so you can kind of clearly see it a little bit better. All right, this might be taking too long. All right, so you get the point that, and actually it might confuse you. So we'll just delete that and go back to the red box. So this red box is my risk factor. That's how much risk I was willing to take on that trade. While the green box will represent the amount of profit I was potentially looking for the trade, right? All the way up to 23.40. Of course, I wanted it higher, but again, that is what it is. So you can clearly see here by the size of the red box and the size of the green box where I got out that this was about a 1-to-2 profit loss ratio target. Okay, I wanted a little higher than 23.40. I really wanted it up here towards 24, but again, I didn't get that. So my entry there was at 22.81, and I ended up exiting at $23.40. While my risk was from 22.81 down to a low of 22.50. So I was risking 30 cents to make 60 cents. 1-to-2 profit loss ratio right there. All right. So again, those were all the trades that I really took on PVTL. There was one more trade I did here. I was still holding 250 shares. I added in 2,000 for a new breakout. It failed. I sold out and lost like 300 bucks. All right. So those mark out every single trade that I took there on PVTL. Okay. Now, if you wanted to watch that in real time, there will be another video that is uploaded today, and you can watch me actually trading that in real time. All right. My next really big trade here we'll talk about on INO or NIO. Is that it? Yeah, NIO. Okay. So here we'll show my trades on this one again, and I'm going to walk you through a scalp trade that I took. Some of you may call me crazy. Some may say I have no clue what I'm doing, but apparently I do if you can make $6,000 trading in a day. So there will be some that question this trade, and there'll be some that say this is amazing, but at the end of the day, I'll walk you through why it is exactly that I took the trade I took. First, we'll talk about this trade just briefly. Basically, I got in $4,000 shares before a breakout. And then I got scared of all the short sellers trying to keep it down. And I was like, oh, this might dump on me. I'll just get out and not risk it. And then, of course, you can see what happened thereafter. So I was one of the first traders in on the big boom, and I just completely sold out for no reason. So this right here was a complete noob, inexperienced mistake that I made. This I should have never done today. I should never made the mistake of selling out too early, and I did. That is a prime example of a very beginner mistake that I made today. In hindsight 2020, when you look back, it just blows your mind on how stupid it was to get out of that. So basically, I was in 4,000 shares long at $7.90 before NIO ended up ripping from $8 to a high of $9.70. So you guys do the math. I'm in at $7.90. If I were to hold all the shares up to $9.77, it would have been around an $8,000 trade. But knowing myself, I would have never took on that much risk all the way up. I would have been sizing out. So I did miss out on probably another couple $1,000s there profit on the day. From a very simple mistake, and it is what it is. All right. But now we're going to move forward to the trade where I made $3,000 in less than about a minute. So as you can see here, I have a total P&L on the stock NIO today for $3,000. All right. I took what we would call a scalp trade off the 50 moving average. So I took a scalp bounce trade and took 10,000 shares on the trade. All right. So to show you this trade, what I did is I got in long. You can see here 10,000 shares at $8.38. So my entry was right here in that arrow, and my exit was at 867, which would have been 867 would have been like right there. Okay. So I took a 10,000 share scalp trade on a 50 EMA bounce. So for one, I'll walk you through why it is that I took this trade. Some would go, that's too risky. That was a horrible trade to take. And in regards to this, right? This, you're right. This would have been an extremely horrible trade to take if I was anticipating this to turn into a massive long play, but I wasn't. I took this trade anticipating we were going to do just this exact thing. We were going to have a short, intermediate bounce and short squeeze, at least up to the 9 moving average and potentially higher to retest the breakdown level. And that's exactly what happened. So again, when it comes to trading, you have to understand what is it that you're trading for? What type of setup are you trading? Not all setups are the same and shouldn't be treated the same, okay? Right? And so, yes, if I were taking 10,000 shares here, anticipating it was going to break back up to 977, that would be very foolish because the likelihood of that happening is basically not going to happen. But for me to take 10,000 shares on a 50 moving average bounce to the 9 moving average test and possible breakdown level, that is a respectable and strong probability that that would happen. So if I can give you a short little mini lesson, the reason I took this trade is because, well, as we know, the stock ripped, it got overpumped and overextended. And with any stock that gets pumped and overextended, there is going to usually be a massive, massive sell-off. And this is where a bunch of short sellers come in and push the price down. And eventually those short sellers are going to cover their position. They're going to cause a bounce and a short squeeze. And that's exactly what took place right there. Okay. So with those short sellers all squeezing out and me taking in the trade, I was able to make a total of $2,700 there on that particular trade. I made a small like 250 or 300 bucks on that one, and this is where I got 2,700 bucks on those small 2 candles. Okay. Now, of course, I took a huge size, huge position. That's why I made that much money, but I was extremely confident pulling and putting in that many shares on that particular trade just because I've been trading for so long. I've taken many of these types of setups. I was extremely comfortable jumping in 10,000 shares for that scalp trade right there. And that alone right there, knowing how some people trade, think about it. Think about all the players that are in the game when you're trading. When stocks start to move the way they do and they move this way and that way, and you're like, oh, that doesn't make any sense. You have to understand there are so many traders in the game. Nobody's trading exactly the same as you. Some people aren't trading the same size as you. As you can see on this little small dip, I took 10,000 shares. I was one of the reasons as for the stock to start moving. I entered long before the stock even got up above the 50 moving average. So let's go back. The mini lesson here is when stocks get overvalued and overpumped, they will most likely have a massive sell-off and a massive drop. During this massive drop, you're getting a mix of people selling from them being long, right? From anybody who was already winning in the stock as it was going up, these are people selling. And then you have anybody who is just watching the stock getting ready to short sell it. They are also piling in. This is what causes this massive pull to the downside. So for one, the stock gets overvalued and overpumped, overextended. We have a massive sell-off followed by a bounce that leads to another massive sell-off. This was the first attempt that NIO had at the 50 moving average. Okay. The reason I was so confident in this trade is because it got overpumped, overextended. It was a massive sell-off. I knew short sellers were getting into this and they were selling it down, meaning they would squeeze a little bit. It was the first attempt that NIO had at the 50 moving average. Usually the first attempt at a 50 moving average on the intraday chart will lead to at least a bounce where you can make some money on the upside. And when a stock has an aggressive, fast-paced move or drop into the 50 moving average, and the 50 moving average is red on my chart. Your chart, it could be different. You may not even have one on your chart. But again, when there's a fast, aggressive downward move that just basically smashes its forehead or its face right into the 50 moving average, it usually results in a bounce. And I knew that. So think about my level of experience. I knew it was overvalued. I knew it was overextended. I knew there'd be a pullback. It was the first attempt at the 50 moving average for the day. I knew people were short selling. I knew it had the potential for a squeeze. I do an extremely great job at trading reversals and small little mini scalp bounces. So all in all, yeah, I was super comfortable nailing a 10,000 or a 10,000 share trade here. So what I did is I watched it. We hit the 50 moving average. We broke through it. But as we broke through, I could see that buyers were starting to come back on level 2. I could see that the sellers on the ask side of the level 2 were starting to increase the ask, meaning they were starting to ask, the ask price was starting to increase ever so slightly, which means The sellers were basically telling the buyers, we want more money for the buys. Okay. When stocks are going down, and then all of a sudden, so when the stocks are going down, the bid will be dropping on the level 2 and the ask will be dropping on the level 2. Okay. When they're going down, 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 as soon as the ask stops dropping and the ask starts increasing, that is the sellers. Theoretically, think about it. The ask on the level 2 are sellers. The bids are the buyers. When prices are going down fast, people that are, the bidders, they're going to be saying, well, we don't really want to buy it unless we're getting a cheap price. So they're going to lower the bid. And the sellers need to find buyers to sell through. So they're going to keep dropping the ask to hopefully get buyers willing to buy. And that's what causes fast downward moves. And when things are getting ready to reverse, what's going to happen is sellers will start to raise the ask price a little bit by a little bit, which is starting to tell you that the sentiment on this move is starting to change and it's starting to reverse. Because if it were not reversing, then of course the prices would keep dropping. But the sellers started raising the ask down here by the 50 moving average, which is basically saying, if you want to buy, you need to buy at a higher price. We're trying to get you to pay more because we think it's about to go or it's about to come up. So we're asking for more money now on the ask side or the sell side. So once I was able to recognize that, I took a 10,000 share position just before the 50 moving average, and instantly we popped up. We squeezed up on this candle and I dumped it out, all my shares, 10,000 shares on one exit, and I ended up getting $2,700 for the trade. All right, so to walk you through this, ready? So I took a 10,000 share position. My entry was at $8.36. So my risk was this little red, or that's not red. Let's go to red. So my risk on this trade would have been this red box. So that was my risk on the trade. And my profit potential or reward was this. Oop, that's not even it. It's actually lower than that. This whole green candle. So as you can see right there, I was risking from 8.30 cents or $8.36 to the previous low candle was 8.26. So I was risking 10 cents to make up to this level, which is 881. So my entry was 8.36 to 881 or 8.38. Sorry, 8.38 to 8.81. That's about 40 cents. So I'm risking about 10 cents to make 40 cents. That's a 1-to-4 profit loss ratio. That's a very good profit loss ratio there. Okay, so I was risking about 10 cents to make 40 cents per share on my 10,000 shares. That is a proper and good trade to take, only and if only you know how to trade it the way I did. So I didn't end up getting all the way out at 880 or whatever it was. Yeah, I didn't get all the way out 880. I ended up getting out at 867. So my entry was 838 to 867. So altogether, I made, that was right. So 4 is 27. So I made 29 cents on the trade. I risked 10 cents. So I almost made a 1-to-3 profit loss ratio on that particular trade. All right. And with all those trades, and I had another one in here. I had another trade on like Netflix today for, $294. I had some trades on AMD for $322. So all in all, that's going to bring up my P&L to a total of $6,438 on the day. I ended $6,345. So I paid about $100 in commission a day for all of my trades taken. All right. So I hope that helps you guys determining trades, understanding profit loss ratios, and to give you some insight on what it's really like to be a day trader in and out. So anywho, if you guys like the video too, please give me a thumbs up, a like, share, and subscribe. And if at any point you guys want to join into our trading team, we have a course, we have a live trading room. We teach people. We have 2 classes a week where we go over different topics and different trading strategies. We have a whole chat room. So we have a whole course designed to help you learn to become a trader, and everything and all the tools you'll need to become a trader, stock scanners as well. So again, that's the first link in the description of my videos. You can also get it by, going to like the little info circle up here in the video in the upper right-hand corner of the video. So at any point you guys want to join our trading team, it's the first link in the description, or you can click up here somewhere in the video. And if you guys just want to check out our free chat room, it will be probably the third or fourth link in the video below. That will allow you to get into a stock trading chat room for free, involve yourself with different stock traders, pick up on the lingo, start to learn it yourself. And at any point, you can speak to some of our premium members. You can get in direct contact with me or any of our team trading moderators and ask them questions, and get a feel for our community before you ever pull the gun on any of our trading, trading services for that matter. So once again, thank you guys as always for tuning into the channel. I do appreciate the support. And as always, I will see you on the next one.